Everybody, Chuck Barone here. Wednesday, October the 19th, 2022. Big data day today, guys. Got a lot of stuff to report. Big real estate day. We knew this was coming. Wait till you hear some of the stuff I got for you for this report today. Just outrageous. As always, before we start the show, I just want to thank everybody for their support, watching the videos, and everything you guys do with your likes and comments and questions. We love you guys. We appreciate the support very much. The markets today, a crazy, weird day in the market. The streak of crazy keeps going, right? Stock market, not so much. The stock market down small today. I think the market taking a breather, trying to get its bearings because it's been whipsawing all over the place. With the last couple of days been pretty good up days. Well, now today a little bit taking some of those profits off the table. I wouldn't really call it a sell-off, but a down day across the board in stocks. Now the bond market, on the other hand, wow. Bond market, we already know, is in a bear market, meaning it's down 20% from its peak. Today, the bond market really got whacked hard. You had, listen to this, guys, the 10-year sitting at 4.13%. That's up 13 basis points today. Remember yesterday was just under 4%? Today, boom. So I don't know if we're going to see the 10-year get back under 4% again. Now, although every bunch of the bonds from 1 year to 30 years, all above 4%, the 2-year sitting at 4.55%, up 12 basis points today. We're going to see the 2-year soon at 5%. Wow. Now this bond market and these yields are really torquing the economy around now. Will you hear some of this stuff on real estate? The dollar today, massive good day again, up almost a point, almost to 113 on the dollar index. It's still the king. It's going to have its trading moves up and down and rumor here, rumor there moves, but right now the dollar is just really unchallenged as far as against other world currencies. I just wish it was doing better in the grocery store and, for the stuff we have to buy every day. But against world currencies, right now it's dollar's king. As a result of the dollar having a monster day up today, metals were down. Gold down $22, settling last I saw at $1,630 per ounce. Silver down 28 cents at $18.56 per ounce. What are you going to do? I mean, the dollar is, when we all know how metals work, they're basically inverse from the dollar. So dollar up, metals down. The oil market today, oil rebounding, bouncing back up 3% today. $85.81 per barrel, so it's above the 85. It's been kind of stuck between 80 and 85, then it had that big bounce up and then coming back down. Today holding above 85, so I guess that's the new support number. Let's see if we can get oil under $85. The phenomenon, though, natural gas, which had a massive run-up earlier this year, well over $9, now sitting at $5.44, down another 5% today. I don't understand it, I got to say, because I would think the demand for natural gas with winter, we're getting snow in some states in the U.S. already. I would think the demand for natural gas would be up. Apparently, that's not the way the market sees it. Bitcoin today, down small, sitting at 19,197. Hanging in there, Bitcoin. Go Bitcoin. In economic news today, wow, guys, wait till you hear some of this stuff. Okay, so last month we were all amazed watching the Treasury market and the resistance number and the support that the Treasuries, the 10-year Treasury was getting on the market. We were all kind of assuming we had government intervention, Federal Reserve intervention in the market. Listen to this, guys. Last month in August, Treasuries posted a record foreign inflow of foreign money coming into the Treasury market. Now listen to these numbers, guys. In July, they had an inflow of $23 billion from foreigners into the U.S. Treasuries. In August, listen to this, $174 billion coming in from overseas. I think we can safely assume that this number is the reason Treasuries managed to not rise like crazy, right? It's going to be fascinating to see what happens with this money now, though, because 174 billion flows in. It's like, 7 times, 8 times, more than 8 times the normal amount. Some of this money is going to flow back out. And what's that going to do to interest rates? So a fascinating, fascinating number. People running, it's funny to me. I was reading, they said people were running from British bonds because their debt to GDP was approaching 85 with this tax cut they were proposing. And they were running a flight to safety to the U.S. treasuries, U.S. bonds, where our debt to GDP is at 1.25. 125% of GDP, right? So the world's off its rocker, guys, and it's going to get crazier as we digest all of this stuff. Everything's upside down right now. Now, the Fed, I got to give St. Jerome credit for one thing. I call the guy St. Jerome of Jekyll Island because this guy works miracles in the market all the time. But the miracle he's working with his rate increases, sadly, is not really working on inflation. But one thing I'll tell you that it is working on is real estate. We got a lot of real estate data coming in today. And wait till you hear some of these numbers. We got a real estate catastrophe brewing is what we have. Rates today on a mortgage sitting at 7.25%. I tell you now, rates in the 6s were completely unsustainable with real estate. Rates in the 7s, real estate's all done. Until the pivot comes, depending on where rates are when that pivot comes, real estate's toast. Mortgage brokers coming out today. Mortgage demand drops to a 25-year low. The lowest demand for mortgages since 1997. So nobody wants mortgages. This is going to put a lot of pressure on the economy. Maybe the Fed can get the recession they want just through real estate. Because as I mentioned in a few videos, how real estate really has just massive ripple effects. It affects so many things when housing slows down. When you go to all the people who build the houses, the cement guys, the carpenters, the roofers, the contractors, the people who transport stuff, the people who are suppliers of all this stuff, the nails, and it's just ripple from the suppliers to the manufacturers, and it just ripples through the entire economy. There's not much of our economy that isn't connected to real estate somehow. Bad news. And also for the mortgage business, compounding that disaster is this. The number of people right now who can benefit from a refi at this time with these rates has dropped to an all-time low. So basically right now, less people can benefit from a refi than ever before. So basically no one can benefit from a refi. So that portion of the mortgage business, which was sustaining the industry in a big way throughout the couple of years of the stim, pandemic, whatever monies, ultra low mortgage rates, refis were boom, boom, boom. A lot of companies built on massive refi businesses, all done, going away. Dodo bird, bye-bye. Dinosaur, so long. Crazy numbers. Crazy stuff. Listen to this. Adjustable rate mortgages are on the rise. Right now, of the new loans that are being written, granted, there's not a lot of them. But here in Vegas, they're closing about 2,000 houses per month. I don't know how many of those are cash. I could look that up or have Jordan, but 13% of the new mortgages are adjustable rates. And what they do is they offer you the teaser rate for a fixed period, usually 2 or 3 years. And at the end of that period, now the rate starts to adjust. Well, I tell you this, I've been doing loans for a long time. I could never, right now, recommend to a client, no matter how much they wanted it, getting into an adjustable rate mortgage. Why would you want to put yourself in a situation where you know your payment is going to go up? When you put adjustable rate mortgages are sometimes really good. Adjustable rate mortgages are good when rates are going down. Because you know if you're in this mortgage, when it's time to adjust, rates are lower than they were when you started, so your payment doesn't go up. In some cases, it even goes down. Okay? But getting into an adjustable rate mortgage when rates are going up, well, it has the opposite effect. And basically what you're doing is writing yourself a situation where you better be in a good position in 2 years. Nothing better happen in your life. Nothing better ever happen to your equity. Nothing ever better happen, because as your fixed rate term expires and you cannot refi out of that mortgage, this is exactly what happened in 2008. This was the main driver of all the foreclosures. And now history repeats, except this time it's not subprime. It's people who should know better. It's mortgage guys who are desperate to do business and will actually screw their own clients to do a deal. This is not going to end well for these 13% of mortgage originations that are getting into adjustable rates. It's just stupid. And here's the deal. So you buy a house, you put 5% down, you take an adjustable rate, you save yourself, you get, instead of 7 1/4, you get 6 1/4 fixed, or something of that nature. Well, in 2 years, rates will be higher, and you're going to hop past the 7 1/4 you avoided if you would have got a fixed rate, and probably jump who knows where. Now, if something happens in this real estate market, which I'm going to talk about in a second, and your equity drops, where you're breaking even equity-wise or even a little bit underwater, negative equity, guess what, man? You're stuck in that mortgage. There's no refining out of it now. This is not going to end well. Housing starts falling again, and they fell way more than expected, dropping 8.1%. Last month was revised down again. Housing starts not doing well right now. Builders not having much faith, and I'm going to get to that builders report any second here. So now there's going to be less supply. That'll help support the price. And then the good news, I guess, on that report was permits for new builds did rise 1.4%. So, if you come down 8.1% and then you kind of go up 1.4%, I guess you get a little of that back, but builders not real happy right now, not going to be putting a lot of their own capital out there, and lenders obviously much more reluctant to lend, more stringent guidelines, higher rates, just unbelievable. Now listen to this, guys. Builder confidence, this we talked about yesterday, dropped not these numbers. I got into the report a little more today. It dropped 8 points to 38 on the index. Now, just 6 months ago, that very same index was at 76. So the index has fallen by 50% in 6 months. Builders say prices from where they are now could drop another 20%. Wow. So check it out. Right now, the national median price for a house is $436,000, a few bucks. The peak was $466,000, plus or minus. So houses are already down $30,000 Now they're talking about 20% more. Well, a 20% drop from 436,000 would put the median at 348,000. Now, selfishly, being a mortgage guy, I would like to see prices in real estate come down that much because it would reopen the market to first-time buyers, regular Joe Schmuckatellis, people who are normal blue-collar working people, like I consider myself. And, with rates where they are and these prices, they're just shut out of the market. This is just simple fact. But what about those 13% of the people I was just talking about who are taking adjustable rate mortgages? What happens to them? Now you're paying higher rates on a house that you financed that was worth $466,000 is now worth $348,000. What do you think is going to happen with those? We got a real estate catastrophe brewing, guys. It's going to get very, very, very bad in real estate. It is what it is, though. These are the numbers. I tell you now, what we've been saying every single day, and I'm going to continue to say, save as much of your income as you possibly can. If you possibly can do it, avoid adding new debt to your life. If you can, pay down some of your existing debt. Even if it's $25 extra, it makes a difference. Spend your money more thoughtfully. Be cautious. This is not the time to reach. This is not the time to want. This is the time to hunker down, man. Batten down the hatches. The storm is coming. It's going to get ugly. You need to do the things you need to do to protect yourself, because the Fed is determined to bring unemployment higher. And if you're one of those and you're not prepared for it, anyway, guys, I always have to say I'm sorry at the end of the show because everything is just so negative right now. But it's where we are in the world. And you got to know, and I promised at the very first show, I promised that I would tell you guys the truth no matter what it was, for good or for bad. I get flamed a lot, lose subscribers a lot, because people have these beliefs that they're not going to give up, and sometimes I'm contrary to those beliefs. But I'm going to tell you guys the truth as I see it, give you the best advice that I think I would tell my own family to do. Anyway, tomorrow's another day. Tomorrow we get unemployment numbers, so let's see what that looks like. I got a feeling those numbers are going to be strong for the economy, adding to this whole mixed bag of baloney. Anyway, guys, we love you. We appreciate you. If you like what you're hearing, hit the like button. Ask your questions in the comments section. We love you. We appreciate you. We'll see you again tomorrow. Thanks.